Hello traders, the title of the video is Practical Elliott Wave Tips during the corrective phase. Alright, so we know that the Elliott wave cycle is formed of the multi-wave and the corrective phase. Alright, so today we will be talking about Elliott wave trading tips during the corrective phase. Alright, if you look on this chart, I'm on the monthly chart. I'll go to the quarterly chart instead, where I started my wave count. Quarterly chart of Liberty Global Incorporation, Class 8. That's LBTYA, Lima Bravo Tango Yankee Alpha. This is an American stock that belongs to the communication services sector. All right. So as you can see on my quarterly chart, it looks to me this is the first wave, second wave, third wave, fourth wave, and the fifth Elliott wave. So we can say that the motive wave is ending right here where I place my black vertical line. Okay. So now there is a correction that is underway. All right. We want to look at that correction. Is it going to be complex? What can we wait for? What can we expect? How can we handle that corrective phase? That's the main topic today, and I'll be showing you the step that one should take, the precaution that one should be adopting to avoid trading mistake. I need to remind traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Now, I want to look at something very quickly. You can see here I was saying to you this looks to me like the first Elliott wave, but if we go talking about the Elliott wave validation, this is my preliminary wave count. I don't want to dwell on the wave count as such, but I just want to show you something quickly. So from the quarterly chart, we are now going to the monthly chart. If you look carefully here, the structure of the price action from here all the way up here. Personally, I believe that the first Elliott wave, in fact, has started from here and has been subdivided. I might zoom into it enough for you. Has been subdivided into 5 manual waves. That's what I want to show you very fast. So talking about Elliott wave validation, we use different time frame to analyze the internal waves of the impulse wave and also of the corrective wave. All right, so though on the quarterly chart, if I go back again to the quarterly chart, it looks to me that the first wave starting from here, but as I drop down to the monthly chart, it looks to me that we have what we call the slanted, inverted head and shoulder chart pattern. See, this is slanted inverted head and shoulder chart pattern. Being for here, this is the head in this section here, and this is the left hand side shoulder, and this is the right hand side shoulder, where the first Elliott wave has spring up, second wave, first manual wave of the first wave, second manual wave of the first wave, third manual wave of the first wave, fourth manual wave of the first wave, and the fifth manual wave of the first wave. So we have a complex first Elliott wave, second wave, and the third wave also is a complex third Elliott wave. I'm not going to go into that one now. And followed by the fourth wave, and the fifth wave also a complex wave, blah 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 blah. All right. So now let's go back again to our. So we are on the. I will stay here on the monthly chart. So we see first wave, second wave, third wave, fourth wave, and the fifth wave. The multi-wave is completed. Talking about the Elliott wave cycle. Now a correction has begun. What is the first thing that will come into your mind? Because I say to traders that when we are counting Elliott wave, we are going one step at a time. If anyone said to you they know exactly what the price will do, run away from them. Run away from them. Because we look at the price structure at this junction, at this point in time, we examine what is taking place, and we try to figure out what is likely to take place. So can you tell me straight away, are we going to have a flat correction? Are we going to have a zigzag? Are we going to have a triangle? Are we going to have Elliott wave combination? All right. You can't tell straight away. It's okay. That's correct. That's the correct answer. No one can tell straight away what kind of correction will take place here. But then we go a little bit deeper. We start looking at the internal way, what's going on here. Price went down to this point here. You see the moving average 14. So price break below the moving average 14, rally up to retest it. Trader responded and sold it down to this point here. So 1, 2, 3. And then apply again one more time, try to rally up to retest the moving average. So you can see that the moving average is a dynamic, a key level. Break below the moving average, try to retest the moving average, went down again, trying again to retest the moving average. This is what we call dynamic support and resistance level. Here the moving average was a dynamic support level. Here is becoming a dynamic resistance level. I talk about this, I think at Day Pro Traders YouTube channel. Please don't ask me to show you that video. Myself, I have to go on YouTube and YouTube search that video. So try to YouTube search dynamic support and resistance level. Hopefully YouTube will show you that video, all right? The reason is that I've been recording video for years, all right, so you can understand what's happening here. So now again, price went down. So we see 1, 2, 3, 4, 5. Do you agree? You can disagree. This is true. When it comes to Elliott way, there are a lot of disagreement, all right? So feel free to disagree, all right? So we see 5 move down. So what is coming to your mind? What is the first? It's a correction. So it's not a trending. It's not an impulse wave. In fact, we can go look at it a little bit more. All right. So 1, 2, 3, 4, 5. It looks more like a impulse wave because the fourth wave is not overlapping the first wave, and the third wave here is not the shortest wave down. But don't be fooled. It is a corrective way because we have a trending first. Now we see 1, 2, 3, 4, 5. Can I ask you a question, please? What is the corrective way that is coming to your mind? What is your expectation? Your expectation, the first thing that should come into your mind for a correction that is coming down in 5, right, is a zigzag pattern. Right? Don't mistake the zigzag pattern with the C wave of the flat correction, because the C wave of the flat correction can also be subdivided into 5. But here we are after the multi-wave, we see 5 wave down straight away. It's a correction. Therefore, the first corrective wave. So do you know the 4 essential corrective wave? All right, the triangle, the zigzag, the flat, and the combination. You need to get those ones straight away. Always know your 4 essential corrective waves. So now, when I'm asking you the question, which one are you thinking of straight away, you should refer to those 4 essential corrective waves. All right. So personally, the first thing that is coming to my mind as I see like this, I say, all right, there's a high chance that we may have a zigzag. So what are the steps talking about practical, all right, Elliott wave tips? We have finished with the theory now. It's now you are standing in front of your chart, you are sitting, in fact you are sitting on, and you want to figure out what to think. Now you want to apply your Elliott wave theory, your Elliott wave principle in real time, doing something practical with your theory. So now, practically, we see like this, we apply what? Fibonacci retracement to that move. Here it is, retracement, Fibonacci retracement from the top to the low of that move down. What are we looking for? That's a very good question. We highlight a 50% Fibonacci retracement level. The reason is the B wave of the zigzag pattern very often will rally up to the 50% Fibonacci retracement level. So our first expectation, not guarantee, my friend, expectation, until the price fulfills our expectation, is just an expectation. Our first expectation is that there is a high chance, if we're going to have a zigzag pattern, so far, that's the first thing that's coming to our mind, there's a high chance that Liberty Global will rally up a bit into that zone of $40.69, call it $41 zone. This is an expectation. Practically, the price does not have to fulfill our expectation. In theory, yes, but practically it does not have to. So it doesn't mean that the Elliott wave is useless. No, it is a guide helping us to have a bit of idea what is likely to take place. Can be messy sometimes, but it is very useful tool that will help us to navigate through this messy market. All right, so you see now, let's say how shall you go up to this point? But you don't be surprised if it just, so you are expecting it to come here, okay? So this is why we say one step at a time. You're expecting it to come here. Okay? Don't assume that it will definitely stop there. It can go 2, 2, 2, 2, 2, and then go back up again. And you say, what is this? And then we go again and review this thing. Is it a distortion? Is it a funny flat correction? What's going on here? But in theory, using the Elliott wave theory, it makes sense to expect it to stop here. And after that, if it reaches that point, we can forecast, if it finds a resistance here, we can forecast that it will continue to go down again. 1, 2, 3, 4, 5. Sometimes you may not see like this 1, 2, 3, 4, 5. It will be just a move down, pew, down. You go to the lower time frame, on the weekly chart, on the monthly chart, you won't see the internal wave. It's all hidden. It's all in a pudding. All right? So it's there, but it's hidden, but you can't see it. So sometimes it's clear and neat like you see here. This is useful for us, but then we can say, all right, there's a high chance that there is another move. Should be 1, 2, 3. Is that a 1, 2, 3 now? Here, 1, 2, 3. Is that all? We will see. One step at a time. All right? We will see. But looking at the chart straight now, you see that the price breaks above the moving at 14 again. You see with this torque and the breaks above, it's now retesting it here. So for day trading and swing trading purposes, we can use a top-down trading method, giving priority to bullish signal above the $34.21 and priority to bearish signal below the $34.21. So if we apply top-down trading method after breaking above the moving average 14, which is a dynamic support at this point in time, and retesting it, we implement the top-down trading method. If we receive a buy signal, we see whether it's going to gently manage to reach that level. It may not. It may retest that level. And if the price come to this point here, there will be sellers. Why? Because a lot of normal chart pattern trader will say, Joel, are you get off my face with your mumbo jumbo Elliott wave? Can't you see that it's just ordinary head and shoulder chart pattern being formed here? The head, the left hand side shoulder, and the right hand side shoulder here. And those normal chart pattern trader will join practical Elliott wave traders at this point in time. So we will be selling, looking for an opportunity to sell here. Normal chart pattern trader will also look for an opportunity to sell here. But if the price reaches that level, if, all right, we just implement again a top-down trading method. We check the economy news relating to Liberty Global Incorporation, and then, all right, we apply the trading triangle. Market first, S&P 500, the sector before the individual financial instrument, right? And so on, and so on, and so on. And we take it like a pro using a different time frame trading method. All right. So this is what we can expect using the Elliott wave theory during these are practical tips that we can adopt during the corrective phase. So because we can see the internal wave, which is good. So if it was 1, 2, 3, and it start going up, all right, we'll be thinking of which pattern? The flat correction. A classic flat correction, a running flat correction, and a expanded flat correction. But because it came down 1, 2, 3, 4, 5, Elliott wave traders zooming or dissecting the price action here will think of zigzag pattern, and they will highlight this level of $40, 69, call it $41 zone minimum. Can go above it. Doesn't mean it will definitely stop there, because I know some traders, if you are learning something new, you learn it by letter, isn't it? You learn everything, you say, it must be stopped at 50% and so on. And after that, we will set a target for the C part of the zigzag pattern. So some traders may say, what are you talking about C? The zigzag pattern, the flat correction are ABC corrective wave. So the A part of the zigzag is subdivided into 5. The B part of the zigzag is subdivided into 3. This is the theory. Sometimes you may see some funny things happening and just put a question mark on it and move on. You don't want to be stuck, okay? If you don't like it, you can walk away from it. But if it's too messy, just acknowledge that, okay, this one, put a question mark on it and then move on. Or, what did I say? Sometimes, if you don't know, make any sense, you see, just refer to the market pattern. Price is now in a decline, was in a declining channel. So if you don't know, your wave count doesn't make any sense and you get confused, there is always a way out. The market pattern will help you. So here you don't know what's going on. Oh, George, I don't know what's kind of correction is. Well, it's down in a declining channel. Now it came out of the declining channel. All right, that's all you can say. And then again, you can just draw your trend line again here, right, from a higher low here. All right. Isn't it? Will the market pattern help you to avoid all the complexity of the wave count sometimes? Yes. Very simple, all right? So now, after this is our first expectation. If we hit this level, start going down, we'll now try to focus where the C part of the zigzag pattern will end. What do we do now? We don't apply Fibonacci retracement. This time, we'll apply Fibonacci extension to the A part of the zigzag pattern. Boom. All right? All the levels count. 138.2% level. Can stop there. 150, 161, even down to the 200% level. This is the greediest bearish target for that zigzag pattern. I doubt it they go all the way to the 200 level because it brings the price almost to the 0 level. So we'll be watching that the C power will stop somewhere in this zone between the 138, 150 and 161.8% level. All right. So these are just practical area with tips during the corrective phase. So you look at the correction. So the most important thing, you want to get your multi-way correctly, because if you get your multi-way wrong, then your corrective wave analysis is starting on the wrong foot, all right, which is not good. You want to get your multi-way correctly, place the vertical line, and now zoom into it and see what's going on. If you can't see it, because now I'm on the monthly chart, can't see it, go to the lower time frame. If you can see on the weekly chart, go to the daily chart, and sometimes you may see it. Sometimes it can be quite compact, all right, or opaque. Can we use that word in English? Opaque in French means that you can't see through it. Do we have the same word in English? All right. You can't see through it, too dark, all right? All right. Okay, just put a question mark on it and move on. All right. So looking at the structure here, so there can be a bit of confusion for traders. Say 1, 2, 3, is it finished? Now here again, there's one thing we talked about before, how to trade a complex wave like a pole. It looks to me we have a kind of a double bottom here. You see a double bottom, we can cover it, isn't it? All right. And then we just wait, all right, wait and see. And how is, if it goes up all the way here, then we want to figure out why we have 1, 2, 3, 4, 5. Is it because of the double bottom or what? Okay, and so on and so on. All right. To summarize this video to traders, all right, we are talking about practical area with tips during the corrective phase. All right. In this instance, we have noticed that the correction that has started. We have identified 5 move down. The only corrective wave that can come into our mind at this stage is a zigzag pattern. We know that the B part of the zigzag pattern very often will rally up to the 50% Fibonacci retracement level of the A part of the zigzag pattern. Therefore, there's a high chance, not guaranteed, maybe not, that the stock may go up to the $41 zone. It may continue to go down straight away like this, so don't be surprised, all right? And if it reaches that level and start going down, we'll expect the C part of the zigzag pattern to come a little bit below the $20 zone, all right? Between the $20 and the $10 zone. That remain to be seen. All right. At the end of the day, we are trading the S&P 500. If the S&P 500 become very, very bullish, a lot of stock will benefit from it. So don't be surprised if the price start going up. At this junction, use the market pattern and take it one step at a time. Zigzag pattern allow trader to forecast the market. We can forecast the market because now we see 1, 2, 3, 4, 5. This is the only pattern that's coming to our mind, and we understand that pattern, the structure of that pattern. So we have an expectation based on the structure of the zigzag pattern, and with that we can forecast what is likely to take place. But our forecast is just an expectation. The price must confirm it. And in every case, one must use a different time frame trading method without ignoring the trading triangle. This is the best approach. This is my recommendation, traders, so we don't get into trouble, all right, using the Elliott wave theory. Practical Elliott wave trading is about using, okay, the Elliott wave theory, okay, to make real gains in the financial market without losing, okay? If you have any question or suggestion, my friend, all right, this is your time to put in the comment section. And in due course, I will be busy recording another video to answer your specific question. If you think that, George, this is another blah, 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 blah from you, please let us know by giving us the thumbs down, all right? If you think that this is, okay, useful video to you personally, all right, give us the thumbs up, all right? If you think that this is an amazing video that everybody should know about it, learn something from me, feel free, all right, to share it on Google+, on Twitter, and also on Facebook. We are the TSTW24 traders talking about practical Elliott wave tips during the corrective phase. Happy trading to you all, and speak to you soon.